Hey traders, let's take a look at a few trades that I took on gold. So, right, this will be the checklist and we'll be following it. So, right here I saw a presence of a liquidity sweep under the 30-minute bullish order block, right? So, yeah, presence of liquidity sweep, waiting for mitigation of opposing low time frame imbalances. So, on the 1 hour, you can see that for this buy trade, we created a balanced price range, a 1 hour BPR, right? So here we mitigated the 1 hour bearish fair value gap with a 1 hour bullish fair value gap. So we can look for price to hit further to the upside. So I was targeting this buy side liquidity, but slightly a bit more, right? Because price on gold likes to overrun. So yeah, after a mitigation of the opposing imbalance, right? We look for a 3 or 5 minute change of character. So going to the okay, let's say you go to the 15, okay, or okay to the 5 price action seems clearer, right? So you can see that there's a 5 minute bullish order block. So price set liquidity inside of it and made a body candle close above the last higher low, right? So afterwards we are expecting a creation of a newly formed fair value gap. So we can see that price is down to this 5 minute bullish fair value gap where we enter for longs, right? And yeah, it did retest for a 1 minute change of character. So so you go to the 1 minute. Okay, it's after a break. Okay, price came down. So as you can see, right, when price came up, it didn't form a change of character on the 1 minute, no, right? Price came down, it just dipped all the way. It didn't break above this 1 minute change of character. Right? So that was a problem, right? It didn't break above. But afterwards, price uh, went close to my stop loss and eventually became upwards here. So on the 15 minute, you can see that I guess price only wanted to sweat. Price only wanted to sweep liquidity here up to here, right? And not up to this point or this point. And afterwards, it dumped all the way down. So I guess the main mistake was that okay, firstly price swept liquidity, right? And when it pumped up, it lost momentum, right? It lost strength. So you can see that on the 15 minute, you see this slow, really slow and bad price action. So you can see that as price hits up, it just consolidates with a lot of like tiny wicks, there isn't any strong bullish momentum for price to push upwards. Yeah. So that's one thing. And I identified this 5 minute bullish order block as a point of interest. But you see, when we are on the 1 hour, right? We are on the 1 hour, okay, price actually form a third candle that is consolidating. Right. So price is most likely going to come back and tap this 1 hour bullish fair value gap, which is of a higher importance than the 5 minute bullish order block. Right. So we could have looked for price to come down to this point of interest instead of looking for the 5 minute bullish order block. Right. So as you can see, when we use this lower time frame point of interest, right, we only got to this profit level, right? And afterwards it dumped down. So lower time frame means that you should be aiming for um, a lower risk, a lower reward point of interest, right? Which just so happens to be this area, right? And yeah, we should have looked for a stronger time frame point of interest, which is a 1 hour bullish fair value gap, right? We should wait for price to retrace inside this before we look for any entries. Right? There's another trade that I could have taken, right? So here we can see that price has swept some trend line buy side liquidity, right? And it's most possibly this buy side zone, right? And after the sweep, we have to wait for a mitigation of opposing low time frame balance, which is this 1 hour bullish fair value gap. And it indeed got mitigated on the 15-minute time frame. So how do we know that price is truly heading down and not just sweeping liquidity inside of this 1 hour bullish fair value gap? Is because of the creation of the 15-minute bearish fair value gap, which shows that price is very bearish. So here, okay, here there's a checklist where it says wait for a change of character on the 3 or 5 minute, right? So the change of character will be up here, right? Right now, somewhere around here, or even here, right? But that wouldn't make sense because price after sweeping liquidity will hit to from external, it will hit to internal, right? So price will be bearish, and when it hits to this 1 hour bullish fair value gap, it might do a change of character and hit upwards. So it doesn't matter whether my change of character is here or not, right? Because this change of character is used to push price towards this point of interest, right? Afterwards, right, we wouldn't know whether price will want to hit upwards, or in this case, disrespect the 1 hour bullish fair value gap and hit downwards. So where should the change of character be is after the um, bearish imbalance has been created, then we can put the change of character, right? So wait for a creation of a uniform fair value gap, which is right here, the 15-minute bearish fair value gap. Afterwards, what happens is that we wait for a change of character, right? So now then we find a change of character, right? So if we hit to 5 minutes, we can see that there's a change of character below the last lower low, right? Or or you can say break of structure, right? But yeah, you can say a break of structure too. Okay. It will make more sense for it to be a break of structure here because price is already in a downtrend. So right after price retested, right, um, fair value get created after retest. That's a break of structure, and then yeah, after break of structure, we can look for a retest of the break of structure level to enter for sales. So it'll be right here. Right. Um, structure retest. Right. Then we can target possibly these lows. Right. But eventually, Go just dumped all the way down. Yeah, it dumped at nuts from 155 pips down to 735. Crazy. Yeah.